Prime Minister Anthony Albanese to meet with Chinese President Xi Jinping as the frosty relationship between the countries starts to thaw. Elders shares tumble as the CEO exits, and the world's population hits 8 billion people. It's Tuesday, the 15th of November, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Adam, I received a text message yesterday from our colleague, Sean Aylmer, who was texting me from a bar in Philadelphia.
Okay. Was he filing a story?
No, he was providing me with some unsolicited feedback. I was expecting it to be on the podcast and the content, the stories that we've been doing, and just generally that. No. He had been on to our Instagram, and
Right.
which is our Fear and Greed Instagram, obviously Fear and Greed podcast, and he was providing me with some feedback on the T-shirt that I was wearing in a story that I recorded. He just basically wanted to sledge me from the other side of the world. All the message said was, "Saw your Instagram story. Nice T-shirt." Thanks, Sean. I'm glad you interrupted your holiday to provide me with that bit of feedback. So clearly, I think he misses us.
Well, I think he does. And probably at that hour of a bar in Philadelphia, maybe that's when he missed us most.
Yeah. Well, there wasn't much punctuation in his text message. And usually I would kind of count on Sean to be a bit of a stickler for his punctuation. So I'm going to kind of read between the lines here and say he was enjoying himself.
Okay. We'll give him a bit of holiday latitude.
Yeah. I mean, it didn't stop him sledging me from all the way from Philadelphia. But anyway, I shall make a note. I'll make a little note of that, and I shall remind him of that. And if you'd like to see I thought it was a pretty nice T-shirt, actually. You can head to our Instagram page, Fear and Greed Podcast on Instagram, and see what you think.
But didn't you go for the T-shirt with a shirt over the top, or did you just go plain T-shirt for this one?
On this occasion, just plain T-shirt.
Oh dear, I'm with Sean.
You haven't even seen it, now you're sledging me.
I can imagine.
Oh, jeez. All right. Okay. Well, look, you've got an interview coming up today, and it is, despite kind of the budding animosity between us, it's a very good interview, and it is with James Wagg from Mentha about whether we are now at last seeing that wave of insolvencies that has been kind of talked about for so long.
That's right, Michael. This is what we feared would happen during COVID, which was that a lot of businesses would be under so much pressure that they had to call it a day. It's never something that you want to see. But we didn't see that during COVID. It was really interesting. And obviously the big theory is around, was there enough government support to help businesses carry on, even some businesses that shouldn't have? And so together with the Turnaround Management Association of Australia, Mentha have released their annual turnaround survey, and they're looking at exactly that environment, the business environment in Australia, and the outlook ahead as to whether all of these businesses can still make it through.
Yeah, it's a good chat. It's worth sticking around for, coming up a little bit later on. But the main story this morning, Adam, Prime Minister Anthony Albanese will meet with the Chinese President Xi Jinping in the first talks between a Prime Minister and the President in 6 years. Prime Minister Albanese confirmed the meeting as he stepped off the plane for the G20 in Bali. He said the talks have no preconditions and he's looking forward to having constructive dialogue. This is a big step, and it really feels, Adam, like we've been building to it now for a while, in particular over the last few days.
Yes, step by step, Michael. China previously declared it's ready to meet Australia halfway as it seeks to reset relations between the two countries. The comments were attributed to Chinese Premier Li Keqiang and published in the state-run media outlet Xinhua. Premier Li and Mr Albanese met briefly on the sidelines of the East Asia Summit in Cambodia on Saturday, and Xinhua reports that the Prime Minister told his counterpart of his willingness to, quote, bring the bilateral relationship back on track.
Now, the news of really what you would describe as a breakthrough in Australia-China relations came as Treasurer Jim Chalmers yesterday called for a more stable relationship between China and Australia. He said, "I think it's in everybody's interest for our region to be peaceful and prosperous and stable and secure." But he did note And this would make the conversation between the Prime Minister and the President quite interesting, that a restoration of the relationship would require China to lift some of its trade restrictions against Australia.
China is Australia's largest trading partner, accounting for nearly a third of our international trade. But that trade has been in decline as China tightens restrictions on Australia's exports like meat, coal and wine and barley amid security and diplomatic tensions. Australia last year requested the World Trade Organization to intervene in the dispute, and interestingly, yesterday Trade Minister Don Farrell said the government was willing to discuss off-ramps with China instead of waiting for a World Trade Organization decision. Xi has not held formal bilateral talks with an Australian leader since he met Malcolm Turnbull in 2016.
Yeah, it is certainly a very big week for international politics. Now, turning to markets, Adam, the ASX ended mostly unchanged yesterday. There were some early gains, but they kind of disappeared in afternoon trading. The S&P ASX 200 closed down 0.2% to 7,146 points.
Yeah, it had been a pretty interesting week last week around the world and in Australia. The resources sector led the way higher on the optimism of China's policy changes on COVID, and support for real estate would be a big boost to demand. Fortescue Metals Group added 10%, South 32 jumped nearly 6%, BHP added 4.6%, and Champion Iron rose 13%. On the downside, Elders fell 23% after announcing the departure of CEO Mark Allison, and despite posting a solid set of results, and we'll touch on that a bit more later, Telstra fell 3.5%, Cochlear dropped 4.1%, and QBE Insurance Group fell 4%.
And just quickly on commodity markets, oil and metals prices rose while the Aussie dollar slipped slightly to trade at around 66.8 US cents. We'll be back in a moment with the rest of the day's business news. Adam, agribusiness group Elders has announced the departure of longtime Chief Executive Mark Allison and posted a 9% rise in annual net profit to $163 million. You mentioned this before. Elders is benefiting from strong margins in fertiliser, in pesticides and weed control, but its share price fell heavily yesterday on fears that the good run of profit growth may be coming to an end.
That's right, Michael. And we've had some good seasonal weather, but also some threats, as we know, with flooding around the country. Elders is an institution in the bush. It was founded in 1839 and has served Australian farmers ever since, but it almost collapsed during the global financial crisis under the weight of a $1.4 billion debt, following their expansion into forestry, telecommunications, and even automotive components. Mark Allison has been the architect of its rebuild, shifting from chairman to chief executive in 2014, and in shaping the company back into a profitable, pure-play agricultural business. It has been a good and strong success ever since. Allison says that his sense is the outlook is positive, but the market reaction shows that shareholders are a little nervous about wet weather in Eastern Australia, as well as the long-term outlook for cattle and sheep prices, which are pretty high at the moment.
Yeah, and Adam, speaking of wet weather, parts of New South Wales are in the middle of a flood crisis at the moment. Towns in the central west, kind of near Orange, have been inundated by floodwaters, with residents rescued from rooftops using boats and helicopters. In fact, there are still flood warnings in place across really quite large chunks of the state.
That's right, Michael. And the wild weather has hit Victoria too, as we know. The SES has received hundreds of calls for help, with some parts of the state receiving a month's worth of rain in just a few hours. It's been a worrying situation, very, very stressful for many people, and we're actually in for more bad weather in the months ahead.
Now, Adam, travel agent Flight Centre held its annual general meeting yesterday and warned that cuts to airline commissions would slice 1% from its profit margins. Flight Centre forecast that its underlying operating earnings would hit between $70 million and $90 million for the first 6 months of this financial year. That is obviously better than the $184 million operating loss the same time last year. Chief Executive Graham Turner, who has appeared on this podcast before, told shareholders that this year will be a year of gradual recovery for the industry, and he added that there was considerable pent-up demand that was not yet fully translating across to bookings. Now, shareholders were probably somewhat disappointed that the recovery is slower than they expected, and Flight Centre shares fell 3% yesterday.
That's right, Michael. Flight Centre also warned that some customers are running out of time to use outstanding travel vouchers that they received when their trips were cancelled during the pandemic. So if you have them, use them as soon as you can. Turner said the company had extended its COVID credits until December 2023, but that was not always true of credits held with suppliers. So in many instances, in order to lock in a booking and use supplier credits, people will need to book before the end of next month, he said. Flight Centre also reported total transaction value, which is a measure of how much business the travel agent is writing, rose 246% year on year to $6.8 billion in the 4 months to October. That's another sign the travel market is back on track post-pandemic. And remember that Flight Centre is not just those retail storefronts that we see out and about. It also owns some enormous business travel services in Australia, as well as package deal travel operators in the USA.
Now, Adam, yesterday you were speaking to Chloe Stokes from Forager Fund Management about health and beauty stocks, and one of the companies that you looked at was Adore Beauty. And yesterday was actually Adore Beauty's annual general meeting. And at the meeting, Chair Marina Go says that the company's weak share price is not reflective of its performance or the opportunities in its markets. Ms. Go told the AGM that revenue was down 29% in the first quarter of FY23, but added that the company would return to double-digit growth in the second half.
Adore Beauty is an online cosmetics retailer and its share price has fallen nearly 60% in the year to date. Adore Beauty was a big winner from lockdowns when people had to buy their cosmetics online, but the market is less convinced about its prospects in a post-COVID world.
It was one of those companies that benefit. What do they call it? Zoom face, isn't it? You know, when you need to pay more attention to how you look.
I've never been openly accused of Zoom face, but perhaps I needed to pay more attention.
Well, it is kind of confronting all of a sudden when you're just looking at yourself. And it's okay when your picture is one of the little thumbnails down the side of the Zoom call.
Very forgiving.
But as soon as then you start speaking and you kind of become the big picture that's enlarged in the middle of the screen, you're like, oh, it can be a little bit surprising. And that is why I suspect places like Adore Beauty and cosmetic surgeons and the like have suddenly seen a bit of a spike.
How do you look on the big screen, Michael?
Depends on whether I'm wearing my favourite T-shirt, which apparently, which is just not good enough. So I'm still smarting over that. You just wait. I have got an extensive range of T-shirts that I'm going to bust out for all of my assorted videos, for LinkedIn, for Instagram, even for TikTok.
Oh, everyone's a winner.
Everyone will be winning from this. Anyway, aerial survey company Nearmap, which is another company that we've actually spoken to on Fear and Greed, is deferring hiring activity and focusing on preserving cash because it's concerned about economic uncertainty impacting its customers. So Nearmap issued a trading update yesterday saying it could potentially lose 2 customers during the first half of FY23, representing potentially $6 million in sales. It's still expecting growth, but the warning is yet another piece of evidence that economic uncertainty is taking a bit of a toll on business behaviour.
Yeah, that's right, Michael. Nearmap employs more than 450 people and provides geospatial information to more than 12,000 businesses and governments around the world. Its business is essentially regularly flying planes over urban areas to collect up-to-date photos and high-resolution maps for its clients. It is under takeover offer from a US private equity firm with a vote from shareholders due in a couple of weeks. Several institutional investors have signalled their intention to vote against the bid, saying the price substantially undervalues the company.
Now, Adam, if it feels like it's getting even more expensive to fill up the car, it is because it is getting more expensive to fill up the car. Fuel prices have hit a 17-week high with national averages of $1.99 a litre for petrol. This is according to the Australian Institute of Petroleum.
Yes, Michael, and here in Sydney, I got whacked with that very expensive petrol bowser just yesterday, and it really depends on where you are in the country. In Sydney, Melbourne and Brisbane, average fuel prices are above $2 a litre, but at the same time, Melbourne and Perth are in the discounting phase of the fuel cycle, which means they might drop a bit before rising sharply. So look out for the best price you can.
Indeed, that is very good advice, but it is worth noting, Adam, that according to the Australian Institute of Petroleum and my own personal research, the price of diesel has stayed remarkably flat at $2.35 a litre, which is when you are trying to fill up a very large four-wheel drive, which I need for
good suburban traction.
Yeah, that's right. That's right. Got to put the kids' bike somewhere. That costs a lot of money. And you think about that, the impact as well then on any businesses that are transporting goods across the country. And that is a huge cost to business when that hasn't moved from $2.35 for a very long time now.
Absolutely. And it's not so much a cycle, is it? At that point, it becomes a flat line and at the high end of the scale.
Yes, I think you might be right. Now, high-profile Australian investor Mark Carnegie has been caught up in the collapse of cryptocurrency exchange FTX. Mr. Carnegie has long been a bull on cryptocurrencies. He runs a cryptocurrency investment fund out of Singapore, and it seems to be such a fan that he actually bought the naming rights to a new species of fly from the Australian Museum and named it after Bitcoin. How good's that for a story? But anyway, he said that he managed to withdraw his clients' investments from FTX before it collapsed, but he was not fast enough with his personal cryptocurrency assets.
Carnegie said he lost about $150,000, saying he was absolutely shocked at the collapse of FTX. It has also emerged that the venture capital arm of Telstra Ventures, put money from its $350 million third investment fund into FTX. Telstra wouldn't comment, but you'd have to imagine that investment is now worth nothing. In other news about the collapse, Reuters is reporting that the weekend hack may have seen US $1 billion stolen from FTX. There's also rumours that CEO Sam Bankman-Fried secretly transferred US $10 billion of customer funds from FTX to prop up another company he owned via an accounting backdoor that meant customers and auditors were never alerted the money was missing. Bankman-Fried denies this.
Okay, moving on to overseas news now, and China is unwinding some of its property industry restrictions in a further sign that President Xi Jinping is turning his mind to bolstering the country's ailing economy. Beijing has been trying to stamp out speculation and rein in soaring home prices in a policy crackdown partly aimed at curbing the industry's excesses and partly aimed at making homes more affordable for ordinary people. But the restrictions have been deeply damaging for the Chinese economy.
That's true, Michael. They have. There's 16 policy measures that have been announced, from loosening deposit requirements for home buyers to helping property developers' liquidity. The measures have been described as massive in scale and a targeted credit easing for the property industry. The easing of the real estate restrictions comes just weeks after Xi secured another 5 years in power and just days after he eased some COVID restrictions. The policy shifts should help China's growth outlook and will see the recent rally in China's stocks likely continue.
This is an interesting one, Adam. US Federal Reserve Governor Christopher Waller has told everybody to, quote, take a deep breath after the better-than-expected inflation figures in America last week, saying that the central bank is far from done rising interest rates. Christopher Waller is a voting member of the Federal Open Market Committee that sets interest rates and said that inflation was just one data point, and while it's positive, interest rates were still lower than they need to be.
Governor Christopher Waller was speaking at a Q&A for an investment bank in Sydney yesterday. He said the worst thing you can do is stop, and that inflation was enormous. One interesting data point that he gave us was that he considered real interest rates were still relatively low and cited models that show the Federal Reserve funding rate should be about 6 to 7% instead of the current 3.75 or 4%. He says markets should focus less on the pace of rate rises and more on where the peak will be.
Finally, Adam, I mentioned this one at the top of the show. The global population is tipped to reach a new milestone at some time today, tipping over to 8 billion people. Of course, estimating populations is a somewhat kind of inexact science, but United Nations modelling suggests that we will hit the 8 billion mark today. Just to give you an idea of how quickly the population is growing, we reached 2 billion in 1925. It took another 35 years to get to 3 billion. And since then, we've added another billion people every 10 to 15 years.
And I hope, Michael, by the end of today that I'm still one of the population is expected to peak in the 2080s at about 10.4 billion, plateau for a bit, and then start to fall. Imagine that, another 20% population in the world. And that comes with its own set of challenges. As society ages and shrinks, there are fewer people of working and tax-paying age to help pay the bills. We're already seeing it happen in countries like Japan.
I love how your lofty goal for today is just to make it through to the end of the day.
Always the optimist.
That's right. It's setting quite a low bar for the day. Anything else that you achieve throughout the day is a bonus, really, then, isn't it?
Yeah. Looking up from there.
That's right. All right. Up next is the Fear and Greed Daily interview. And today, Adam, you're speaking with James Wagg from Quartermentha.
Yeah, that's right, Michael. And this is the annual turnaround survey, looking at the number of businesses that have been going into liquidation and going into high stress. And what not only does it look like from the last couple of years and through the government measures of COVID support and Australian Tax Office perhaps being kind in regard to collections, but how is that looking now in the period ahead? Can all these businesses survive?
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Adam.
Thank you, Michael.
It's Tuesday, the 15th of November, 2022. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.